Let's get more insight on this from Jared Weisfeld, technology sector specialist at Jefferies. Jared, always good to see you.
Thanks for having me back again, of course.
By no means am I a chip expert, nor do I play one on TV, so I'm going to ask you a stupid question, but I think one that a lot of our viewers might have, and that is, are these chips, is what AMD and NVIDIA, are they, what are they supplying in terms of how different these chips are from just viewing chips as sort of the next generation chips that fuel Web 3.0?
So if we take a step back, the quick answer to your question is absolutely yes. These are the chips we focus on. If we take a step back to Facebook's earnings announcement, where they guided their 2022 CapEx to as much as $34 billion. And I think that needs to be put in context. That's more than Taiwan Semiconductor spends per year. And that's the world's largest foundry in terms of making the actual chips. So the infrastructure investment that Facebook is making is massive. And when you zoom in terms of what they're actually spending on, they went out of their way to talk about the incremental spend towards AI and ML, so artificial intelligence and machine learning chips. And those chips that are best suited for that happen to be parallel processing chips, which are GPUs, so the graphic processing units that AMD and NVIDIA put out. So AMD and NVIDIA are really in the sweet spot in terms of the trends that are happening at Facebook in terms of incremental CapEx. And this is not going to stop at Facebook, right? If you're another cloud service provider, Microsoft has already endorsed the metaverse even just last week, right? So if you're Microsoft, if you're Amazon, if you're Google, you're going to see incremental CapEx follow this announcement. So I think Facebook is at the forefront of this, and you're going to see billions and billions continue to be invested in terms of AI, ML type architectures.
Hey, Jared, it's Tim. So I also not a chip expert and not playing one on TV. And my question is more about, is AMD re-rated based upon the future, or is it based upon that they really have taken enormous market share and essentially their data center chips and their processing chips today have eaten the lunch of not only Intel, but some of the other main peers out there? And just talk about that valuation.
Absolutely. So I think both of those points are absolutely intertwined. As it was noted, AMD now is sporting, mid 20% market share in terms of core compute with respect to the server end market, and that's the most important end market. It's stickier revenue. We're talking about Microsoft's, Facebook's, the world that are customers, higher margin, and Lisa Su and the entire team has really done an amazing job from an execution standpoint. You look at what they announced today. They announced Milan X. They announced the MI200, which is their next generation GPU, which goes against NVIDIA. They confirmed that Genoa, which is their next generation data center chip coming out in next year, is completely on time, utilizing the TSMC 5-nanometer process. So not only is it about the market share that has already been established, but it's investors willing to ascribe that premium multiple, because AMD probably, I am sure they are not planning on stopping at 25%, right? Their number one competitor, Intel, in traditional compute, is clearly wounded, while TSMC while AMD is able to leverage TSMC's process technology roadmap and really advance ahead. And everyone on this show has kept talking about bricks and mortar. And, you look at the entire supply chain, Taiwan Semiconductor is AMD's largest partner, right? They are producing all of these chips, and these chips are massive, which we can certainly get into.
Jared, I'm wondering how we should think about the potential total addressable market in terms of what the spend could be on metaverse chips, and how much of that is actual new spend or replace spend. In other words, no longer spending on whatever prior generation chips and shifting that spending forward.
For sure. So if you go back to Facebook's announcement in terms of them increasing spend to up to $34 billion in calendar 2022, Zuckerberg and Sheryl Sandberg on the call, there's no intention to monetize this anytime soon, right? We're talking about revenue generating opportunities potentially in 2030 and beyond. So we're still just building the infrastructure. So that CapEx profile is going to go up and to the right from here, and that baseline is up 70% into 2022. Then you layer on the incremental spend from Microsoft, from Google, from Amazon, and anyone that plans on entering the metaverse. And you think about video games and how that can play into the mix. I mean, we're talking about a number that could be certainly hundreds of billions of dollars in terms of the infrastructure. And specifically to your question, Mel, with respect to the chips that are getting produced, I alluded to this earlier, but these chips are, in some cases 5 to 8 times larger than the chip that goes into your cell phone, right? We're talking about chips that are 800 to 1,000 millimeters squared. So these are monster chips, and the semiconductor capital equipment supply chain also benefits in a tremendous way.
Jared, great to get your perspective on this. Thank you so much.
Thank you so much.
Jared Weisfeld of Jefferies. So there's picks and shovels, and then there's picks and shovels for the picks and shovels players, Guy. So where would you want to go?
First of all, I love the fact that AMD's got the Italian cities with their chips, Milan and Genoa.
I knew there was a reason why you had a
myself,
Cheshire cat grin on your face. Anyway.
All right, see, in my head, as usual, on a Monday. Nice haircut, Guy, by the way. You know, we're going to talk about this later, just in terms of their earnings, but if you really want to look at names that could benefit absolutely right now, it's a name like Roblox, which I know you remember this, but we talked about it in the CNBC draft. That stock being one of the first names that should have gone. Look at the quarter they just put up and look at where the stock is trading now. So they're clearly plays. I particularly don't think it's going to be Facebook. Yes, I called it Facebook. And I think, as I mentioned, AMD is time to take some chips off the table. But in the long run, both AMD and NVIDIA still work. Qualcomm, to me, still the cheapest out there.
All right, check out some infrastructure stocks surging today. The name's getting a boost after the House passed a $1 trillion infrastructure package. Tim, you're saying that the resource names are particularly strong.
Well, and we've certainly known about an infrastructure bill for some time. We've also just come through an earnings season where a lot of these folks have actually talked about both CapEx and OpEx and free cash flow generation. And really, with a lot of the core commodities, whether you are a Freeport or whether you are even a steel producer at this point, yes, you've seen a little bit of a pullback, but ultimately we're near, if not all-time highs, we're right near all-time highs. So again, I just think this has been a reminder. It's a reminder also that we're actually seeing follow through on specific plans that still needed to be ratified. I think if you look at the valuations in the sector, again, you don't buy commodities and resource stocks when they're cheap, but they're starting to run. And that is something, again, we're starting to challenge those highs from back in March when rates were higher, and that was a common trade. Now you have information on the profitability and you have the tailwind of infrastructure. I think you stay in that trade.
Karen, some of the industrial names that you hold rallied also.
Well, actually, United Rental opened and traded up to 415, which is way, way, way higher than it's ever traded. But it did end the days on the low, I think. It was only up, I don't know, 60 cents, something like that. So for them, I guess it was clearly a, buy the rumor and sell it first thing in the morning of the news. So I'm still long United Rentals. They had a great quarter. A lot of the reasons that they had a great quarter will be further accelerated by we'll see how long it takes to implement the infrastructure bill. But also one of the things that really worked for them was they have a giant inventory of used machines, which are trading at very high prices. So there's a lot of things to like there. This run up may be a little too hot.